Welcome again sa final series ng training natin, which I entitled Business Taxes. Part 1 basically will include discussion on value-added tax. So percentage tax, wala pa siya. Okay, business tax. Business tax is a tax imposed on businesses. It could be directly or indirectly taxed on them that is based on consumption. This is different with income tax as it is personal. So business tax is based on since consumption siya, it is based on how how the money is spent, not how the money is earned. So business tax is based on the consumed equivalent amount in money of consumed articles. It may be goods, services, or other forms. So this is another tax, an additional tax apart from the imposition of income taxes. So income taxes are based on personal income earnings of an individual or corporation, while business tax is based on is a consumption tax based on the goods and services that was being sold or purchased. So this is an additional tax. What are those entities that are subject to business tax or activities that are subject to business tax? It could be any commercial activity, regular sale of goods or services, services rendered by non-resident foreign corporation or foreign persons, and some business transactions specified by law, including but not limited to sale of shares of stock through stock market, overseas communications, horse race winnings. So there are different kinds of business taxes. We have the value-added tax, which we will discuss, which is included in this training, the percentage tax, which is also included in this training, and the excise tax. So our focus for this series is only on value-added tax and percentage tax. Excise tax, this will be included in the Certified Tax Return Preparer program that uh, we will be conducting. Let's proceed with value-added tax. So value-added tax, upon sale or purchase of goods and services, there is an equivalent tax imposed on the seller, but it was shifted to the customers. However, the liability or the obligation to file and to remit these taxes lies on the seller. So the seller will still remit, will still pay for the equivalent taxes on the to the government. So the tax here is being shifted or being passed on instead of being directly. So instead of being directly being taxed, they indirectly charge this to the consumers or the customers. So what are the basic principles as defined under Section 4105-2 of Revenue Regulation 16-2005? That is a tax on consumption levied on sale, barter, or exchange or lease of goods or properties and services in the Philippines, and on importation of goods into the Philippines. Okay, what are the characteristics of that? It is a business tax. It is an indirect tax. So it is not directly charged to the seller, but it is passed on to the consumers. The liability of payment of tax or the liability or the imposition of tax is actually on the consumer, not on the seller. This is a consumption tax, so based on the amount spent, it is added to each stage of production. So later I will discuss how it works. And it employs tax credit application. Next, who are those persons liable to that? So it could be any person who, in the course of trade or business, sells, barters, exchanges, leases goods or properties, renders services, and any person who imports goods shall be subject to value added tax or VAT. What is meant by in the course of trade or business? So it must be regular conduct or pursuit of a commercial or an economic activity. It should be regular. So it is usual, not special or not seldom, regular by any person. So services rendered in the Philippines by non-resident persons shall be considered as being made in the course of trade or business. However, if it is rendered outside, it is not subject to value added tax. So the basis here for the value added tax is the situs. So where did the income or the sale happen? Is it in the Philippines or not? If it happened in the Philippines or jurisdiction of the Philippines, it is subject to value added tax. If it is not, it is not. It is exempt. So how that works? So how that is considered added to every stages of production. So a sale of a producer to a manufacturer is subject to VAT. A sale of the distributor to of the manufacturer to the distributor is subject to VAT. A sale of the distributor to a retailer is subject to VAT. And finally, the sale of retailer to the final consumers is subject to VAT. So in a sense, VAT is cumulative in nature. So there is an VAT imposed on the transaction between the producer and the manufacturer and distributor, and so on. So each VAT was being uh, paid or remitted to the government. So as you can see, there's series of VAT that have been paid. That is why it is cumulative. Kumbaga, nadadagdagan siya. It may not be added on the part of the um, uh, price being transferred. It, however, upon filing or the filing and payment for each stage of production or level of sale renders the activity to be cumulative or the VAT to be cumulative. Mandatory VAT registration in general. So this is in general. Those taxpayers with gross sales or receipts for the past 12 months exceeding 3 million pesos, other than those that are exempt under the tax code, or those taxpayers who are expecting to exceed their gross annual receipts, sales or receipts for the next 12 months by 3 million. And those taxpayers engaged or habitually engaged in real estate business, they are mandated as um, they are mandated to register as VAT taxpayer. Those previously registered as non-VAT but are now subject to VAT. Those previously registered as non-VAT but are now subject to VAT shall update their records using the IR Form 1905, application for registration information, update, correction, and cancellation. Okay, next, optional VAT registration. So if there are mandatory, there are also optional VAT registration. So taxpayers with gross sales or receipts whose which will not exceed 3 million pesos but opt to register as VAT taxpayer. please take note that once this was availed or once a non-VAT taxpayer opted to be registered as VAT taxpayer, the VAT registration is non-cancelable for the next 3 years. So upon only if the non-VAT taxpayer who opted to be VAT registered subsequently after 3 years um, changes his mind and see to it that or or it appears that or it seems that the annual gross sales or revenue would no longer exceed the 3 million threshold, then they could return or reverse their registration from VAT to non-VAT. Those previously registered as VAT but does not exceed 3 million annual sales, yan, may opt to change to a non-VAT registration. So those liable to VAT but fails to register shall still be liable to VAT but without the benefit of input tax. If, for example, the taxpayer failed to register or to update his registration to a VAT taxpayer, then he will be liable to pay the corresponding output tax. However, he could no longer get the benefit of claiming the input tax. So, for example, Mr. Lopez, a non-VAT registered entrepreneur engaged in trading of goods, has accumulated annual sales for 2020 amounting to 3,500,000. He failed to update his registration. Moreover, his purchases accounted total input tax amounting to 300,000. So is Mr. Lopez subject to VAT? If yes, how much? So our answer, yes, Mr. Lopez is liable to pay the corresponding VAT at his own expense. Since he was not able to charge this or shift this or pass this to his customers, he will pay the VAT at his own expense, amounting to 420,000. This is without the benefit of claiming input taxes from his purchases. So he cannot deduct any input taxes related from the output tax or the sale that he made. In case of change or cessation of status as VAT registered, so we have the following conditions. So if the change of business, if there is a change of business activity from VAT taxable status to VAT exempt. So these are the examples or the conditions where a taxpayer can change or cease the status as VAT registered. So if there is a change of business activity from VAT taxable status to VAT exempt, if there is an approval of request status for cancellation of registration due to reversion of exempt status, if there is an approval of request for status of cancellation of registration due to a desire to revert to exempt status after the lapse of consecutive years. So this is applicable for non-VAT taxpayers who opted to register as VAT. However, they they were still they are still below the threshold of 3 million and opted to uh, re-register as non-VAT. And approval of a request status for cancellation of one who commenced business with the expectation of gross sales or receipts exceeding 3 million but who failed to exceed this amount during the first 12 months of operation. So all goods or properties originally intended for sale or use in business shall be subject to VAT. So pag magkakaroon ng transition all goods or properties or yung nasa inventory, matitira sa inventory that is intended for sale must be subject to VAT. So the taxpayer shall file um, a tax return on relating, or the taxpayer shall pay the necessary output VAT related to these goods, properties, or inventories. So this is one of the issues that have that arose upon the upon the implementation of train. So most of the taxpayers just updated their registration. However, they failed to do, or they failed to subject their inventories to VAT. So there. Okay. So what are the basis of VAT? For sale of goods, it is the gross selling price. For sale of services, it is the gross receipts. For importation, it is the landed cost. So this amount excludes the computation of VAT. Okay? So baka mamaya lagyan nyo na siya ng VAT tapos isasubmit niya pa siya ng VAT. No. So this is the gross selling price based on the selling price as discussed or as imposed or based on the policies of the company. Okay, but VAT transactions and rates. So we have regular VATable transactions, zero-rated transactions, non-VAT or VAT-exempt transactions. So regular VATable transactions, which includes the regular sale or purchase of goods and services, and sale of on government or sales to government. Yan. They are regular VATable transactions. Zero-rated transactions are taxed at 0%, while non-VAT or VAT-exempt transactions are exempt. What are the terms or taxes involved in VAT? So we have here the output VAT, input VAT, VAT payable, and excess input VAT. Output VAT and input VAT. So output VAT pertains to the sales of a taxpayer. Input VAT pertains to the purchases of the taxpayer. So for every sale of a seller, the seller, there is a corresponding value-added tax that was being paid by the customers. And then input VAT. So uh, this tax is comes from the purchases. So for every purchases of whether VAT or non-VAT taxpayer, if the VAT if the seller of goods or services imposes VAT or is VAT registered, then the amount of invoice that should be paid by the uh, purchaser, regardless of whether he or she is VAT registered or not, is inclusive of value added tax. So that is the input tax. So input tax could be actual input tax based on the receipts or invoices. There is also standard input tax that is based on government payments. Transitional input tax, this is related to those um, uh, those who are previously non-VAT but transitioned to VAT. And presumptive input tax, it is specific on process or those entities processing certain um, items such as sardines, milk, etc. So output and input tax. So for a VAT registered taxpayer, output tax is payable. For the VAT on sale, ang equivalent nun is the output tax, which is payable by taxpayer. Payable by the taxpayer, but collected from the initially collected from the customers. So VAT on purchase, input tax is creditable against the output tax of the taxpayer. VAT registrable taxpayer. This pertains uh, to those taxpayers that became VAT registrable but failed to do so. So the output tax, they are subject to output tax on on sale. The input tax, however, cannot be claimed as input tax credit but treated as expense only. Non-VAT taxpayer, sales could either be exempt from VAT or subject to percentage tax. So there is no output tax related to a non-VAT taxpayer. So the input tax is considered or recorded as an expense as a whole. Okay. For VAT payable and excess input tax. So output tax minus input tax, the equivalent or the resulting tax is VAT payable or excess input tax. So if the output tax is greater than input tax, then the taxpayer is subject or liable to pay the VAT payable. While if the input tax is more than the output tax, there is an excess input tax that the taxpayer may carry over, claim as tax credit certificate, or and claim for refund. So what are the output VAT transactions? So we have here sales subject to 12% VAT, sales subject to zero rated VAT, VAT exempt sales, and sales to government. Technically, VAT exempt sales is not an output VAT transaction, but for the purposes of um, it is generally a VAT transaction. So for the purposes of discussion, we will include this in under the output VAT transactions. So first, let's discuss the sales, those sales that are subject to 12% VAT. So this includes sale of goods and properties, including importation of goods and transactions deemed sale. So, and sale of services and use or lease of properties. Under sale of goods and services, so goods or properties is defined or can be defined as all intangible and tangible objects which is either produced or traded, including real properties held primarily for sale or for lease. So it could be a right or privilege, particularly for the use of patent, copyright, design, etc., trademark, privilege to use in the Philippines, any industrial, commercial, or scientific equipment, motion picture films, tapes, discs, radio, television, satellite transmission, and cable television time are considered as sale of goods or properties. Sale of services, it is the performance of all kinds of services in the Philippines for a fee, remuneration, or consideration. So it includes the lease or use of a right or privilege, copyright, patent, trademark, goodwill, lease or use of equipments, equipment. Yan. It could be industrial, commercial, or scientific equipment. And supply of scientific, technical, industrial, or commercial knowledge or information. So what else? Supply of any assistance that is ancillary and subsidiary and is furnished as a means of enabling the application or enjoyment of such property or right. Supply of services by a non-resident person or his employee in connection with the use of property or rights belonging to the installation or operation of any brand, etc. Supply of technical advice, assistance, or services. Lease of motion picture films, lease of the use or the right to use radio, television, satellite transmission, and cable television time. The supply of scientific, technical, or industrial knowledge, supply of any assistance, um, ancillary and subsidiary, and uh, is furnished as a means of enabling the application or enjoyment of such property or right, and sale of electricity by generation, transmission by any entity including the National Grid Corporation of the Philippines and distribution companies, including electric cooperatives. Okay. On importation of goods. So generally, all kinds of services that you may think of is subject to the 12% VAT. Same as for the sale of goods and properties. So it is better to note which items or transactions or what kind of transactions are exempted. If you know what are the exempt transactions, then those that are not exempt are automatically subject to the imposition of value-added tax. Those that are not exempt or those that are not zero rated. Okay, next, importation of goods. So there is an output tax to be imposed based on the total landed cost of the imported materials. So this includes the value includes the total value used by the Bureau of Customs plus customs duties, excise tax, and any other charges that uh, is paid by the taxpayer prior to the release of the goods in customs. So that is the total landed cost. Importation of goods. Um, for the importation of goods, you can look for the value on the import entry declaration and summary of on statement of settlement of duties and taxes. So those that being mentioned or those that is the amounts in the SSDT and import entry declarations, you can find the total value, customs duties, excise tax, and other charges could be supported by other documents coming from the um, customs prior to the release from customs. Transactions deemed sale. This could be, or these are the examples of transactions that are not initially subject to or not initially a sale but becomes a sale. So these are some samples. So transfer, use, or consumption, not in the course of business of goods or properties, originally intended for sale or for use in the course of business. So, for example, a warehouse not being used for um, for a certain period. So, not exceeding 2 years. So, that is a sample of transactions deemed sale. Or if it is not sold, it is transferred, being transferred only. So that is deemed sale. Then distribution to shareholders, a share in the profits. Distribution to creditors as payment of debt. So ex deals. So consignment of goods if the actual sale is not made within 60 days. Retirement from or cessation of business with respect to ending inventories. Those are the examples of transactions deemed sale. So in deemed sales, under Section 2A of the code, the deemed seller is also the deemed buyer, of which no consideration is paid. So there is no actual payment of money. So it could either be in kind or offsetting, etc. In the case of consignment, if it exceeded the 60 days, it will be considered as taxable transaction or VAT subject to VAT. Sales subject to 0% VAT. So this includes export sales. There are certain services that is subject to 0% VAT. So we will know later. And then sales of person or entities which is VAT exempt under special laws or international agreements. Under export sales, so the sale and actual shipment of goods from Philippines to a foreign country is um, VAT zero rated. And the sale of raw materials or packaging materials to a non-resident buyer for delivery to a resident local export-oriented enterprise. So export-oriented enterprise is PESA entities. Example are the PESA entities. To be used in manufacturing, processing, packing, or repacking in the Philippines of the said buyer's goods. So please take note on these two kinds of export sales that it must be paid for in acceptable foreign currency or its equivalent in goods or services and accounted for in accordance with the rules and regulations of the Bangko Sentral ng Pilipinas. By the way, let me go back to the to sales subject to 0% VAT. Previously, based on RR 16-2005, foreign currency denominated sales are considered as 0% VAT transactions. However, upon the implementation of TRAIN, it was deleted. So, foreign currency denominated sales are no longer included as uh, 0% VAT transactions or zero rated transactions. Okay. Other export sales, so the sale of raw materials or packaging materials to an export-oriented enterprise whose export sales exceed 70% of total annual production. Transactions considered export sales under Executive Order 226, otherwise known as the Omnibus Investments Code of 1987 and other special laws, and the sale of goods, supplies, equipment, and fuel to persons engaged in international shipping or international air transport operations, provided that the goods, supplies, equipment, and fuel shall be used exclusively for international shipping or air transport operations. So it must be exclusive. Considered export sales under EO 226. So these are export sales of registered export traders. Um, for every export sales of registered export traders, this shall include commission income. Then the exportation of goods on consignment shall not be deemed export sales until it is being or until it is sold. So this is an exception to the general rule that if a certain good under consignment is not sold within 60 days, it is considered as a transaction subject to VAT. So sale of goods, properties, or services made by a VAT registered supplier to a BOI registered manufacturer producer whose products are 100% exported are considered export sales. Next, sale of goods, supplies, equipment, and fuel to persons engaged in international shipping or international air transport operations. So this is limited to goods, supplies, equipment, and fuel that is used in the transport of goods and passengers. So this is from PH port to foreign port or vice versa. Please take note that if the goods, supplies, equipment, and fuel is not used or used outside the transport of goods or passengers, then it is subject to 12% VAT. Also, if there if uh, if there are what you call this if there are certain drop off points in the Philippines or within the Philippines, then uh, the export sales may not be subject to zero rated pag naging domestic siya, landing on any other ports in the Philippines, domestic ports in the Philippines could not or could be subject to 12% VAT. Okay, on certain services, processing, manufacturing, or repacking goods for other persons doing business outside the Philippines, which goods are subsequently exported, services other than processing, manufacturing, or repacking, rendered to a non-resident or being engaged outside or conducted outside the Philippines. So please take note that this should be paid for in acceptable foreign currency or or its equivalent in goods or services and accounted for in accordance with the rules and regulations of BSP. So what are the other services that are zero rated? Services rendered to persons or entities whose exemption under special laws or international agreements to which the Philippines is a signatory for services rendered to persons engaged in international shipping or air transport operations, provided that it is exclusively for international shipping or air transport operations. Thus, the services referred to herein shall not pertain to those made to common carriers by air and sea relative to their transport of passengers, goods, or cargoes. So it is specific that it is for ship international shipping or air transport. So common carriers by air and sea are subject to 12% VAT. Services performed by subcontractors or contractors in processing, converting, or manufacturing goods for an enterprise whose export sales exceed 70% of the total annual production, transport of passengers by domestic air or sea vessels from the Philippines to a foreign country, gross receipts of international air or shipping carriers doing business in the Philippines derived from transport of passengers cargo from the Philippines to another country shall be exempt from VAT. However, they are still liable to a percentage tax of 3% based on their gross receipts derived from transport of cargo from Philippines to a foreign country. Sale of power or fuel generated through renewable sources of energy. This is considered as zero rated. So this shall not extend the sale of services related to the maintenance or operation of the plants generating said power shall be subject to 12% VAT. May be subject to 12% VAT. Sales of VAT exempt entities under special laws. So we have special laws or international agreements such as Asian Development Bank with Asian Development Bank, International Rice Institute, PESA, CDA, SPMA, which as a result um, subjects transactions of entities registered under this um, agreements to be subject to zero rated or zero rate. So RR number 4-2007 provides that sales to registered eco zones and free port zones enterprises are automatically zero rated. RMO 9-2000 provides conditions for the automatic zero rating of goods, properties, and services made by VAT registered suppliers to BOI registered manufacturer exporters with 100% export sales. Please take note that although it is automatically zero rated, um, the company must show proof or the taxpayer must show proof that they belong to those being mentioned as ecozone or they are registered as such. For BOI registered taxpayers, so they must show certification that they are BOI registered and that uh, uh, they are exempt from the imposition of VAT or the transactions they have are not subject to VAT. Um, BOI certifications, by the way, is valid for 1 year only. So there must be at least a yearly certification or yearly certification coming from the Board of Investments for it for a transaction to be validly considered as zero rated. So export sales and other services, there is an additional provision on export sales and other certain services based on the train law and implementing rules and regulations under RR 13-2018. So, the following items or the following transactions may no longer be subject to zero rated or zero VAT rate, or may not be considered as zero rated transactions in the future. So what are these transactions? So the sale of raw materials or packaging materials to a non-resident buyer for delivery to a resident local export-oriented enterprise. Yan. So the sale of raw materials or packaging materials whose sales exceed 70%. So both the first two items pertains to export-oriented enterprise, and transactions considered export sales under Executive Order 226, otherwise known as Omnibus Investments Code of 1987 and other special laws, processing, manufacturing, or repacking goods for other persons doing business outside the Philippines, which goods are subsequently exported, and services performed by subcontractors and or contractors in processing, converting, or manufacturing goods for an enterprise whose export sales exceed 70% of total annual production total annual production. So these are the um, entities or taxpayers that may not enjoy the VAT zero rating in the future. So what are the conditions of the government or with respect to this additional provision? So there must be a successful establishment and implementation of an enhanced VAT refund system where it grants and pays refunds of creditable input tax within 90 days from the filing of VAT refund application with the Bureau. So, so yung mga PESA, those under um, eco zones or export-oriented zones may no longer enjoy if there is may no longer enjoy the zero rating of their specific transactions if the following conditions set by the government has been met. So if there is a successful establishment of implementation of enhanced VAT refund system, yan, dapat 90 days. Within 90 days, kailangan nakakapag-provide na si BIR, nakakapag-grant na siya, or nakakapag-pay ng refund, nakakapag-grant ng tax credit certificate, or nakakapag-refund na siya ng input tax within 90 days. So, hindi na to aabot sa court. So, that's the idea. The 90-day period to process and decide pending the establishment of the enhanced VAT refund system shall only be up to the date of approval on the recommendation report on such application for VAT refund by the commissioner or his duly authorized representatives, and provided also that the official receipts and invoices was also submitted to the BIR. Yan. All pending VAT refund claims as of December 31, 2017 shall be fully paid in cash by December 31, 2019. So, in this based on this provision, we will know if this the provisions pertaining to the non or the exemption or the non of the exclusion of these transactions as zero rated would be further imposed. So we will see from in the near future whether this will happen or not. So this is a worry kasi of some of those entities that are under PESA or under SBMA or any other export processing zones. So since there is a possibility that they will lose their incentive as a zero rated entity. So upon losing their benefit as a zero rated entity, it would appear that the cost of their um, doing business here in the Philippines will be higher because of additional taxes that they must pay. Provided further that the Department of Finance shall establish a VAT refund center in the BIR and NBOC that will handle the processing and granting of cash refunds of creditable input tax. Okay. So based on this additional provision, this is related to the refund of tax uh, of creditable input tax, refund or application for tax credits. So the happening of the provision or the happening of the condition that lies on the process of the refund of creditable input taxes. So just an idea, although I will still discuss this in part two of this training. So for every month, every quarter, we file VAT returns. So if there is an excess input tax, it is considered as unutilized input tax. So if the excess input tax is not used for a certain period of 2 years, the unutilized input tax would be filed or applied for an administrative claim for refund or tax credit certificate. Upon application, the BIR will decide. So if the BIR um, decides, if the BIR will decide based on the documents, supporting documents that will be submitted by the okay, may ano lang si Ms. Lucy. So BIR Commissioners Dulay issued, yes, I am familiar with this, which moved the last day of filing refund claims to April 12 from the initial March 31 deadline. So suspended. Yes, it is suspended for now. So that's why sabi ko kanina, we will know in the future is gonna if this is gonna pursue since due to some certain factors, especially the COVID-19. So until now, wala pang advice on how long this additional provision might be suspended. Okay, so going back, so if there is an unutilized input tax, it could be claimed within 2 years upon filing of the VAT return. Be claimed as tax credit certificate or refund. So once submitted to the BIR will conduct audit of the documents supporting supporting the claim for refund or the TCC. If the BIR grants the refund, so grants the refund or TCC, then the taxpayer will get the tax certificate or refund in cash. However, if it is not, or the BIR did not agree with what was being applied by the taxpayer, taxpayer can file to the CPA. So within 30 days the um, upon the denial of or actually the decision and filing, there must be a decision within 30 days. Yeah. So previously, yeah, the number of days that must have come that the BIR must made their decision based on the filed administrative claim for refund or PCC must be within 120 days. However, upon the imposition of train, it was reduced to 90 days. And from at the end of 90 days, there is a 30-day window for the taxpayer to file the case or uh, file a case or an appeal to the CTA if in case the um, the BIR did not grant the refund or application for tax credit certificate of the taxpayer. Okay, so andyan yung 90 days natin. VAT exempt sales. So VAT exempt sales. So these are the items of sales or transactions that you must take note of in considering what are those that are subject or not to the imposition of VAT. So sale or importation of agricultural and marine food product in their original state. So original state meaning it it is not yet processed. So sale or importation of fertilizers, ordinary feed, seeds, seedlings, and fingerlings, importation of personal and household effects belonging to resident of the Philippines returning abroad and non-resident coming to resettle in the Philippines, importation of professional instruments, implements, tools of trade, occupation, wearing apparel, domestic animals, personal household effects belonging to persons coming to settle in the Philippines or Filipinos or their families and descendants who are now residents or citizens of other countries. Such parties herein referred to as overseas Filipinos in quantities and of class suitable to the profession, rank, or position of the persons importing said items for their own use and not for sale. So take note, it must be for their own use and not for sale for it to be VAT exempt. So upon importation, um, the taxpayer must be able to prove that it is not intended for sale. Services subject to percentage tax. So all items that might be or transactions that are subject to percentage tax, such as sale of stock that is traded through the stock exchange, and these are VAT exempt sales. And services by agricultural contract growers and milling for others, of pala into rice, corn into grits, and sugar cane into raw sugar. So VAT exempt sales. If the sugar is being refined, that is considered as subject to 12% VAT kasi meron ng additional process. Medical, dental, hospital, and veterinary services, except those rendered by professionals. Educational services rendered by private educational institutions duly accredited by DepEd, SHED, TESDA, and those rendered by government educational institutions. Services rendered by individuals pursuant to an employer-employee relationship, as this is subject to um, income tax, but uh, withholding tax on compensation is being imposed. Services rendered by regional or area headquarters established in the Philippines. Transactions which are exempt under international agreements. Sales by agricultural cooperatives duly registered with the CDA. Gross receipts from lending activities by credit or multipurpose cooperatives duly registered with the CDA. Sales by non-agricultural, non-electric, and non-credit cooperatives duly registered again with the CDA, provided that the share capital contribution did not exceed or does not exceed 15,000 pesos, regardless of the aggregate capital. Export sales by persons who are not VAT registered. So if they are registered as non-VAT, then the sale is VAT exempt. Sale of properties not primarily held for sale to customers or held for lease in the ordinary course or trade or business, or real property utilized for low cost and socialized housing, such as defined under RA 7279 and other related laws. Residential lot not valued at 1,500,000 and below, house and lot and other residential dwellings valued at 2,500,000 pesos and below. Previously, residential lot valued at the threshold set for residential lot is 1.919500, which is being reduced by to 1,500,000, and residential dwellings, house and lot, and other residential dwellings in previously valued at a threshold of 3 million. However, it was reduced to 2.5 million. Further discussion on real properties, sale of real properties, the imposition of VAT on real properties will be discussed on Friday. Lease of residential unit with monthly rental not exceeding 15,000 pesos. So previously, this was only 10,000 pesos. Importation of fuel, goods, and supplies by persons engaged in international shipping or air transport operations, provided that this should be used, the fuel, goods, supplies shall be used for international shipping or air transport operations, not domestic. Sale or lease of goods or properties that would not exceed 3 million pesos. Transport of passengers by international carriers, sale or lease of goods and services to senior citizens and persons with disabilities, transfer of property pursuant to Section 40C2 of the NIRC, association dues, membership fees, and other assessments and charges collected by homeowners associations and condominium corporations, sale of gold to Bangko Sentral ng Pilipinas. Kung meron kayong mga ginto, VAT exempt sales yan. Sale of drugs and medicines prescribed for diabetes, high cholesterol, and hypertension. So those are the samples, or those are transactions, type of transactions or kind of transactions that are VAT exempt in nature. So on importation of professional instruments and implements, tools of trades, occupational employment, wearing apparel, domestic animals, and personal household effects, there's an additional provision. So the Bureau of Customs may, upon production of satisfactory evidence, such persons are actually coming to settle in the Philippines, and that the goods are brought from their former place of abode. So kung saan sila galing, dinala lang nila dito. Exempt except such goods from payment um, exempt such goods from payment of duties and taxes. If these items of these imported items were just um, being transferred from their original place, say for example in the US, to the Philippines for the purpose of personal use, then it is exempt from payment of duties and taxes also. Aside from that, it is also it it is also excluded from or exempted from the payment of duties and taxes. So vehicles, vessels, aircrafts, and machineries and other similar goods for use in manufacture, however, shall be subject to duties, taxes, and other charges. On sale of real properties. So the VAT exemption shall only apply to sale of real properties not primarily held for sale to customers or held for lease in the ordinary course of trade or business, sale of real property utilized for socialized housing, and sale of house and lot and other residential dwellings with threshold reduced to 2 million. Sales to government. So this pertains to all sale of goods and services to government. So the government, before making any payments to the seller or on every purchase of on their every purchase of goods or services, they shall deduct. They deduct and withhold a VAT rate of 5% from the gross payment, which shall be creditable against the VAT liability of the sellers. So as a result, so the amount being paid by a taxpayer based on uh, in his tax return was only 7%, as the 5% was already withheld by the government. So next, input VAT transactions. Treatment of input VAT. So purchases that are subject to 12% VAT are creditable or could be offset to output VAT. Generated purchases are creditable also. However, it could only be it it could be applied for a tax credit certificate or TCC, or it can be refunded. For exempt purchases, so these are only charged to cost or expense. Creditable versus non-creditable input VAT. So creditable input VAT pertains to input tax on current purchases and input taxes carried over from preceding month or quarter. Creditable means it could be offset or deducted to the output tax. Non-creditable input tax are not creditable for tax purposes. So it includes input tax attributable to exempt transactions, input tax attributable to government sales that is close to expense, and claimed for input taxes that is being claimed for refund or tax credit certificate. So this non-creditable input tax may not be deducted from the total VAT payable of the taxpayer. So what are the creditable input VAT? So input tax on current purchases includes purchase of capital goods, domestic purchases of goods other than capital goods, domestic purchase of services, importation of goods other than capital goods and services rendered by non-residents. Input tax carried over from preceding month or quarter are also considered as input VAT. So this input tax um, includes those input tax, unutilized input tax carried over from the previous period, or these are the excess input taxes from the previous period. Input tax deferred on capital goods exceeding 1 million from the previous period. Others, other types of creditable input VAT are transitional input tax and presumptive input tax. So creditable input tax are deductions to output tax provided that this must be evidenced by a VAT invoice or official receipt issued in accordance with the invoicing requirements under Section 113 of the Tax Code as amended. So input tax on capital goods. Input tax on capital goods pertains to purchases or imports of capital goods that are depreciable in nature and that has an aggregate acquisition cost exceeding 1 million pesos. Please take note that the aggregate acquisition does not mean the amount being paid, but the aggregate amount of class of properties that was being purchased. Input tax on capital goods shall be claimed as follows. So if 5 years or more, the input tax shall be spread evenly over the period of 60 months, starting from when the capital goods is acquired. So this is 60 months or less. So 60 months for the life of the asset, whichever is lower. Whichever is lower. So if, for example, the life of an asset is only 36 months, then the input tax on capital goods must be deferred only for 36 months, whichever is shorter. If less than 5 years, the input tax related on capital goods must be deducted outright to output tax. Ah, correction on the slide. It must not be an outright deduction. What was being outrightly deducted to output tax are input taxes on capital goods not exceeding 1 million. So if less than 5 years, uh, If 5 years or more, 60 months. If less than 5 years, the less than 5 years, the shorter period shall be the input tax shall be deferred for uh, whichever is shorter between the 60 months and um, 60 months and the life of the asset. So correction in this slide. Guidelines for deductibility and non-deductibility of input tax on non-depreciable vehicles. Previously, we have initially discussed what are the non-depreciable vehicles under RR 12-2012. So we discussed that this pertains to um, vehicles that are that exceeds to the 2.4 million threshold. So these are non-depreciable vehicles. So for non-depreciable vehicles, there shall be no deduction from the gross income unless properly substantiated. Only one vehicle for land transport is allowed for the use of an official or value of it should not exceed 2.4 million. No depreciation shall be allowed for yachts, helicopters, airplanes, and or aircrafts and land vehicles which exceed the threshold amount of 2.4 million pesos. So for non-depreciable vehicles, no depreciation, no maintenance expenses shall be allowed for deduction, and input taxes on purchase of non-depreciable vehicles, including input taxes on maintenance expenses incurred, shall also be disallowed. So apart from the disallowance on expenses for the purpose of income tax or for the purpose of claiming it as a deduction for income tax purposes, this, the input tax related to these expenses or to this depreciable depreciation shall also not be subject to or shall also or shall render the input taxes to be disallowed. Transitional input tax under RR 16/2005. So when a taxpayer who is not subject to VAT becomes subject to the VAT due to the following. So the gross sales the preceding year exceeded the 3 million threshold, or the taxpayer being exempt from VAT system opted to be registered under VAT system. So these taxpayers were given a benefit of claiming transitional input tax. What are the inventories that may be subjected to the percent transitional input tax? So these are goods purchased for resale, materials purchased for processing which have not yet undergone processing, goods which have been manufactured by the taxpayer, goods in process for sale, goods and supplies for use in the course of taxpayer's trade or business as but registered person. So taxpayer will be entitled to to a transitional input tax on the inventory on hand. So 2% value. How to get the transitional input tax? So it is the 2% of the value of the beginning inventory on hand or the actual value added tax paid on such goods, whichever is higher. So if, for example, there is an inventory of if, for example, there is a beginning inventory amounting to 1 million pesos. times 2%. The transitional the 2% is equivalent to 20,000. Let's say for example, on the same value of inventory, there is an the actual value-added tax paid by the taxpayer is 120,000. Then the transitional input tax is 120,000. Okay. I will give you more example or illustration on this on Friday. Presumptive input tax. So persons or entities. So this pertains to um, persons or entities engaged in the processing of sardines, packed noodles, mackerel, milk, refined sugar, cooking oil. So the term processing shall mean pasteurization, canning, and activities which through physical or chemical process alter the exterior texture or form or inner substance of a product. So they are no longer in their original state because they have undergone physical chemical process. Yeah. A taxpayer is allowed a presumptive input VAT equivalent to 4% of the gross value in money of their purchases of primary agricultural products which are used as inputs to their production. Okay. Okay. Additional on input tax on capital goods. So for capital goods exceeding 1 million pesos. So under the provisions of train law, capital goods beginning January 1, 2022 will no longer be allowed to be amortized. So the last um this is the last year where amortization of input tax on capital goods or the deferment of the input taxes shall be allowed. So this is up to this year na lang. So starting January 1, 2022, there will be no amortization or input tax on capital goods exceeding 1 million may no longer be deferred. However, for purchases made prior to January 1, 2022, the taxpayer may still continue the amortization of the previously amortized input taxes. So the items or the capital goods exceeding 1 million only that was being that has been purchased on January 1, 2022 onwards shall no longer be subject. So those previously subjected to amortization shall still be subject for amortization until it has been exhausted. So illustrative examples on on an input tax on capital goods will be shown on Friday. So VAT on government money payments. So the remaining 7% effectively accounts for the standard input VAT for sales, to government in lieu of the actual input VAT directly attributable or ratably apportioned to such sales. So if there is this pertains to the apportionment of input taxes. So actual input, if the actual input VAT is greater than 7% standard input, the excess may form part of the seller's expense or cost. So if the actual input VAT is less than 7% standard input VAT, the difference must be close to expense or cost. So, so this is I will show you an illustration regarding this on Friday also. So for you to fully understand how this was being computed and how this was being included in the declaration of the tax or the VAT return in the VAT returns. So the VAT on government payments is actually part of the apportionment of input tax rule for mixed transactions. So whenever there are mixed transactions, taxpayer must be able to identify if input tax was directly attributable to VAT taxable transactions, VAT taxable sales to government, and VAT exempt sales. The allocation for VAT taxable, oh, by the way, why do taxpayers need to apportion or need to uh, know or determine how much was directly attributable to the certain transactions? There are some, because there are portions of input tax that may not be creditable, or this are maybe uh, close to exempt transactions. So, so what happens to the allocation? So for VAT taxable transactions, it may be recognized for input tax credit or it is creditable input tax. For VAT taxable sales to government, this shall not be credited against output taxes arising from sales to non-government or private entities. So the VAT on taxable sales to government, so specific when we say attributable, directly attributable, the purchases is directly related to the sale uh, the, of the transactions to government or sales to government. So those that are directly attributable to sales to government shall not be credited against the output tax and must be close to expense. Same goes with the VAT exempt sales. It shall not be allowed as credit against output tax, but should be treated as part of cost of asset or expense. So illustration on this will be shown on Friday. Invoicing requirements. So under RR 16-2005 as amended, a VAT registered person shall issue a VAT invoice for every sale, barter, or exchange of goods or properties, and a VAT official receipt for every lease of goods or properties and for every sale, barter, or exchange or services. So what are the information in the VAT invoice or VAT official receipt um, was essential or vital? Were essential. Okay. So first, the PIN must be followed by the term VAT. So if before kasi there is tin VAT, now we don't those that those receipts or having that registration, that tin VAT, shall be disallowed for tax purposes. Kasi ngayon, teen, then after the word teen or after the number, the VAT follows. The word or the term VAT follows. The VAT must be shown as a separate line item in the invoice or OR. For sales to VAT registered persons amounting to 1,000 or more, it is necessary to indicate the name, business style, if any, address, and TIN of the purchaser. The details of authority to print and serial number of booklets. So the authority to print must be within the OR that was being issued must be within the date of the authority to print. So if, for example, um, the OR is valid until 2022, then the date of the transaction the must be within 2022. If the OR is valid until 2022 and the transaction is already 2023, then the OR is not a valid invoice, or the OR is no longer valid. If the sale involves items which are subject to VAT, and some of which are VAT zero rated or VAT exempt, the invoice or receipt shall clearly indicate the breakdown of the sales price between taxable, exempt, and zero rated components. So it must be clear, or the sales for VATable sales must be separately or clearly uh, clearly broken down as to VATable, VAT exempt, zero rated. So the calculation of VAT on each portion of the sale shall be shown on the invoice or receipt. Administrative requirements for VAT. So for monthly value added tax declaration, 2550M, which is filed monthly for the first 2 months of the quarter, which is filed not later than the 20th day following the close of the month. For EFPS filers based on staggered basis, depending on grouping. For quarterly, so we file 2550Q not later than the 25th day following the close of each taxable quarter, regardless if it is manual filer or EFPS filer. Summary list of sales, purchases, and importation. So along with the VAT returns or the quarterly VAT returns, this summary list was also being submitted by the taxpayer. So this is mandated to be submitted among all VAT registered taxpayers. And this must be encoded and generated in a BRR electronic facility called Relief. So you cannot just send the summary list of sales or purchases or importation that is encoded via Excel. The Relief application allows you to generate a DAT file which will be submitted to the BIR. So failure to comply on submission of summary list of sales, purchases, and importation, there is a penalty of 1,000 for each invoice OOR, but not to exceed 25. This 25,000 pertains to um, one taxable year. So the payment of the administrative penalty does not excuse the taxpayers from submission. Although the taxpayer has paid for the penalties, they are still required to submit the corresponding summary list of sales, purchases, or importation that was being penalized. Subpoena, duces tecum, or SDT, may be issued if the taxpayer failed to submit this summary list of sales, purchases, and importation. So failure to obey the SDT, the taxpayer will be charged criminally, or there is a criminal prosecution on the taxpayer. So willful neglect to submit also, uh, would make or would render criminal prosecution on the taxpayer. So what are the required details? So for summary list of sales, BIR registered name of the buyer, TIN of buyer, nature of sales, vatable, exempt, zero rated, or subject to final VAT, the amount of sales, and the VAT amount of sales. So please take note that when entering TIN in the relief system, it must be unique. So, and it must be a valid TIN that is registered with the BIR. You must also determine if the sales are vatable or exempt or non-VAT or maybe zero rated. Okay, next, summary list of local purchases. So again, the BIR registered name of kanina, the customer, now the supplier, the TIN of the seller, the nature of sales, the amount of sales, the creditable input VAT, and non-creditable input VAT. On summary list of importation, import entry declaration number, assessment, release date, date of importation, name of seller, country of origin, dutiable value, and all charges before the release from the BOC. So, and also the landed cost, if exempt or taxable. Also included are the VAT paid, official receipt number of VAT payment, and date of VAT payment. So the details for summaries of importation can usually be seen in the import entry declaration and statement of settlement of duties and taxes. Most of the details are already in those two documents. Okay, so that's it for the part one of business taxes.